I exited it and told myself like that's it for the day, because I only take 2 trades a day. And if my emotions are like this, to place myself in a position that is not in accordance to my rule, I have used up my chance for that day. So during all this little week that was happening, I actually entered a position that is not in line with my rules. Hi everyone, and welcome back to my channel. So today I want to be talking about a trade that I just took yesterday, 26th February. So I feel like recently I have been getting more and more precise about the kind of entries I want to take, and so I was waiting for this trade for about 2 days. I did not take anything on Monday or Tuesday, but I was just watching the market every day. So by the time Wednesday comes around and I saw like the low has been set for the week, I'm so excited. I got into the markets, got a good profit, and then I was struggling with my emotions like, where's my second entry? Is this going to hit my full TP? Like, does this mean that I'm going to miss out because I've exited my position? So yeah, today I want to talk about that. It's a real life of like trading, you know. You get to see a lot of like, oh, I did this and I managed my emotions so well. But you also have to see the other side of like, wow, I struggle with my emotions because I've been waiting so long for a trade. And when it finally came, I'm like, when's the next one? So here's a lesson to me to always believe that there will always be another trade around the corner. Just know that there will always be another trade around the corner. So this is just a reminder for myself, right? I always say that I'm creating videos for my younger or older self, mainly my younger self, because I can imagine that person who wanted to watch someone else doing things that she wanted to do in hopes to pull it into her existence and therefore playing out for herself. So I might think that I have overgrown that character, and then now I'm just making video for my 18-year-old self, or 21, 23, whatever. But it's not true, because that 23-year-old self, 25, 26 is still living within you, and there will be days where it comes out to play. And yesterday was one of those days, you know, like there will be a voice of a more mature you talking, and then there's this voice of like 26, you know, the first 3 years of trading, that is like talking to you as well. So this is when you actually need advice like this from your big sis, because right now I'm wearing that 29-year-old hat and talking to myself and all my other selves that are watching this video, that there will always be another trade. So anyway, let's get into the trade breakdown. Okay, so this is ESNQ. I ended off the day with 1.7%. So there's no news on Wednesday. We are in the last week of February. So this is just what I'm looking at on the higher time frame. So this is my daily time frame. Yes. So this is on my daily time frame. I said that there's no news for today. And we are also in the last week of February. So reversals are expected. And what I mean by that is like the entire month's range. Let's say if price is currently on one opposing end of the candlestick, I'm expecting like the wick to be formed. So in this case, we are at the lows of February. So I'm expecting the lower wick to be formed before the closing price. So this is on the hourly time frame. You see how this large candle on YM at 9 a.m. actually broke structure for the two highs beside it. So this to me was the last, you know, like push up that triggered the rest of higher prices. So using that same time frame, I look back on Tuesday, there's this fair value gap at 9 a.m. and then this other fair value gap for ES as well. So when price push above it, I would expect this to act as a support level. So you can see that ES actually just tapped nicely on the high before returning down, while NQ stayed right below the 50% of this fair value gap. So that to me is like price respecting this PD array. So on the minute 15 time frame, there are no divergence here. So I'm just waiting for the 9:30 a.m. opening, and this was 9:19. So at 9:30 opening, we can see that price dropped back down into this high sensitivity area, which is your February opening price. So So when this kind of thing happened, I'm just waiting. I'm still waiting. So I waited till 9:50 macro timing. I do not see any divergence, but I do see that ES is already moving out of this H1 fair value gap, while NQ is still underneath the 50%. So I just really enjoy watching price reacting to these levels. Like I've marked them out, February opening price, and then just watch how they react. So on the 15 minutes time frame, it looked like this. Price dropped back into the opening price and then spike all the way up. At this point of time, I'm still like calm and stable. I'm like, yeah, I'm just waiting for, a setup, my setup to be presented to me. I've been waiting all week for this trade. I can wait a bit longer. So this is how it looks on the 5 minutes time frame, where we have a break of structure above this H1 bearish fair value gap, making this now an inverted fair value gap, while NQ is still staying underneath of it. In this case, this is a divergence to me already, and therefore I put in a position on ES because this is more bullish as compared to NQ. So the past few trades I did is mostly on ES now, because I can see that NQ is not being as obedient as it usually is. So we'll just wait for a bit more time for NQ to do its own thing, and then one day I'll come back to it. So I place a trade on ES from the 5-minute FEG form within the upper half of the H1 fair value gap. So in every PD array, you can find the 50%, and then there's the premium and the discount of that PD array itself. And when you're bullish, you're just trying to find positions on the premium, because we do not want to see market go any lower than the 50% to prove that the theory of being bullish is still in play. So this is how it looks like. Here is the M5 FEG, and here is the light little tap into the fair value gap before pushing higher within the H1 fair value gap. And then the stop loss is just underneath this FEG candles low. And if you look towards the right, which is your NQ market, we do not see the same fair value gap being formed right here. So once again, it's showing me that ES, it's more pushing, it's more loaded and ready to go. So the update on 10/12, price was reaching into the previous day high for ES and YM. So here I begin to get like kind of excited. So I told myself, do not do anything until 10:30, okay? Because 10:30 is where I usually look for that reversal back into the range of New York, or it might happen at 12 p.m. lunchtime. So here, price is already reaching into previous day's high, while YM has already reached into it. Like I said, YM is just like the little leader that's showing me signs of what it wants to do, while NQ is still struggling to break out of this H1 fair value gap. So at 10:19, I've moved the full stop loss into break even from here to here. And then I told myself like no peeling, wait for 10:30 a.m. because the wick might close in a green candle. But take note that it's only Wednesday, we still have Thursday, Friday to go, and therefore I had time. But the thing is, I was like kind of struggling already. I expect price to just go there right now. This is what happens when you trade in Asia. I realized that if you spend all day outside, gymming, working out, eating healthy, reading a book, all that kind of stuff, by the end of the day, your willpower is just a bit lower, And London session was at 3 p.m., right? So by the time when you come into New York session at like 11 p.m., you're tired. So at 10:27, I saw a little divergence, and these are the signs that I look out for before I exit a position. So when price is just pushing, going into all these like targets with me expecting price going higher, I try my best not to do anything. But when it shows me signs like this is when I start to take action, right? So that was when I peeled off 50% of the trade. And then at 10:28, I closed out the rest of the position and told myself like, okay, if I were to look for re-entry, I would only wait from 10:50 to 11:10. Then going back up into the minute 15 time frame, let's say if I want to prepare myself for the next macro timing, at ES, I marked out this minute 15 fair value gap. On NQ, once again, we do not see any and on YM, it's down there. At this point in time, at 10:34, I'm like, okay, this is a prime timing, market could just push way higher right now. And I could visualize, seeing this green candle as like a green bullish candle that would just take out the previous high. But I told myself, there is no bottom wick yet on this M15 candle. So it may dig a bit lower before pushing higher. And that will give a macro entry once this candle is printed. So I told myself, all I have to do is wait 15 more minutes, right? Because you see there's no wick underneath. And usually, if price wants to go higher, it would print the bottom wick first before printing higher. Okay, but what we are seeing right now is that price actually print higher first, and therefore this is more bearish than bullish. Okay, so during all this little wickety wick that was happening, I actually entered a position that is not in line with my rules. Like it was before 10:50, I just wanted to ride, the next wave, but you can see that there's so many candle that is just indecisive. And if I were to be in that trade, I would have suffered, like this entire rally, this entire slow, excruciating, painful rally. So what I did was I entered a position and I got out at break even. I longed it and then it was just tickling around and I'm like, no. I exited it and told myself like that's it for the day, because I only take 2 trades a day. And if my emotions are like this, to place myself in a position that is not in accordance to my rule, I have used up my chance for that day. No more, Joyce. Like big 29-year-old Joyce is telling that 25-year-old that, okay, you're done for the day, your emotions are high, walk away. And instead of telling myself, oh, I haven't used up my chance, it's break even, I said, no second trades were taken because my emotions were high after the first. And I'm glad I stuck to it because price did not move much after. And this was 11:51 a.m. near New York lunch. And then the last comment I made is that minute 15 fair value gap looks like a good place for price to retest during lunch. So let's say if market is still bullish and during lunch it decides to do a little retracement, it most likely would retrace into the 50% level of this entire New York range, which sits nicely right above of this minute 15 fair value gap. So by here, I was already out of the entire position. So update the next day, price did not respect the minute 15 fair value gap, and it played out a divergence between ES and NQ, previous day's high. That minute 15 fair value gap that was disrespected, you can see it pushing down, have became an inverted fair value gap where price actually came back to retest it again. So this is what I love about looking at the markets. Like everything that you mark out is just being tested. If you know that this larger time frame divergence is in play and you see this lower time frame PD array, know that it could be used on the reversal side. But don't overtrade, make sure to stick to your time zone, and obviously this entire range up is not my trading time. Alright, so that's it for the end of this video. Thank you all so much for watching. I hope you guys can leverage on what I've learned today for your own experience and understand that, trading timing really matters. Like whether you're in the UK enjoying the European timing or in Asia with lack of sleep in the middle of the night, timing is everything. Know your limits, like understand your willpower, and then stop when it's time to stop. I'm talking to my younger self. The younger self that would still come up every now and again, and it's okay. Big sis is always here. Alright, make sure to subscribe, leave a like, leave a comment if you enjoyed it, and I'll see you guys in the next video. Bye!